that is a figure, as an investor, you can't ignore. High season starts about now. Rental transactions are dropping and sales transactions are dropping. People do leave Dubai, and everyone assumes that everyone comes to Dubai and stays, but people are clearly leaving, because where are they living? It's not going to be good, is it? Hello, ladies and gentlemen, Greg here again for Big Short episode 4. So, first and foremost, a massive thank you to everyone that watched the previous video. I think we hit around 350,000 views, which is absolutely huge. So, biggest thank you that I can possibly give to you all for watching. Keep the comments coming in, ask us lots of questions, give us your opinions. We want to hear it. We want to understand what you're thinking. We also want to understand what you're seeing. What are you seeing in the market? Are you hearing or seeing different things from what I'm about to talk about? Talk to us. We're an open forum, and it's good to understand everyone's opinion on it. So let's jump into episode 4, slightly later than normal, purely down to the season. But what we're going to do is look back at your July and August and actually see what's going on in the market at the moment. But it has continued this trend that we've seen this year so far, with numbers actually dropping. So without further ado, let's get into it, shall we? So let's open this up with a couple of sources, a couple of articles that have been printed locally. Again, I want to stress this. Everything I'm going to talk about is public knowledge. You can go and check it. This is not my own opinion or my own company's opinion or anything like that. This is just a general look at the market, what it's doing, and perhaps talking about these things that no one else is talking about. Because as we know, a lot of the market is driven on hype. A lot of the market is driven with real estate brokers who are all going to be saying, obviously, the positive side, but with every positives, there are negatives, aren't there? So let's get into it. So first things first, this was printed in Time Out. So this is Alec James Smith, who's head of leasing and sales at Savills Middle East. He said there's a lot of new one-bedroom apartment blocks being built. They're flooded. There's too many of them. Therefore, you'll start to see these areas and the prices dropping. So what he's actually referring to there is areas such as your JVCs and what have you. So there you go. There's Savills who've come straight in with a very interesting remark about the market and what to expect. So the second article we've got here, Gulf News. So trends offer hope for tenants in 2025. So according to new data by Bayut and Dubizzle, who are very large platforms here in Dubai to buy, rent and sell property, long-term rents cool as new supply hits the Dubai market. So we've spoken about this before. The projection was around 74,000 units coming to the market this year. Is that going to happen? No. So I think a few owners can breathe a sign of relief there, because of course more stock that comes in, it's only going to drive prices down. Last figures we saw, there were approximately 25 to 30,000 units which had been handed over. Now of course we've got Q4, and I think what you're going to see is probably another 10,000 units coming in, so let's say about 40,000 the total for the year. Now, one thing we have to remember here is that these developers are incentivized to build as quickly as they can, because under the Dubai Land Department regulation, as certain stages of that tower are completed, they can go and ask their buyers, the people that bought off plan, for the next tranche of money. Then they can use that money to build the next segment of their tower, etc., etc. And the general rule of thumb is your profit is realized or seen at the end of building this tower or this estate full of villas or whatever it is that's going on. So it is in the developer's best interest to build these towers as quickly as they can to realise the money coming out of it. There's also guidelines, strict guidelines by the Dubai Land Department that they have certain time frames to complete these segments of the towers or villa estates in a certain period of time. So the motivation's there, and we've also seen, I've spoken about it in the previous Big Shorts, but we are hearing it now. Emaar and Creek Harbour are finishing towers up to a year early than what their projection actually is. And then they're coming to their buyers and saying, well, you now need to pay us. And what they're actually now introducing is fines. So if you don't take the handover within a certain period of time, then there will be a fine of some sort. I'm sure this is all written in the terms and conditions, so it's nothing untoward, but this just goes to show the huge motivation that these developers now have to not only build on time, some of them are building a year in advance, which I think globally you don't hear of, especially when you're talking about 50, 60, 70, 80 story towers. So there's this huge motivation for these developers to build. So although the figure of 74,000, I personally don't think will be realised or seen this year, you'll probably see half that. All of this is going to fall into 2026. In 2026, there's already a forecast of around 120, 130,000 units to be handed over. So you've got all of that falling into it as well. So there's a bit of a snowball effect picking up. And now what you're seeing, I think, is these developers who are wanting to finish these projects as quickly as possible to get paid, to get their profit out. Because if this market is moving in a downward trajectory, the last thing these developers want is defaults. And by defaults, I mean that owners can't afford to pay the rest of this payment plan off because they may be made redundant, the market may be falling away, so they don't want the asset anymore. There's all of these things that we now need to factor in because this market is definitely changing. So just going back to this point here from Bayut and Dubizzle, so they're saying that the long-term rates are cooling. So you're seeing this surge of stock coming in, 30, 40,000, a lot more coming in next year. So what's that going to do to prices? It's going to continue to push them down. So another article here by the Gulf News, they report, well, Dubai rents drop for the second month in places like Al Barsha and JVC that see the major dips. We'll talk about the sort of money in a minute. We'll get to that segment of the show later on. But this is, again, something that we should be expecting. Everything I've been talking about in the last 3 shows, now into the 4th, is the same messaging. More stock is coming in. We'll talk about the population growth in a minute. Is that population growth happening in these specific areas? Or is that happening around Dubai? Is it different people that are coming to Dubai with different jobs, different disposable income amounts for rent? We'll talk about this in a minute, but at the end of the day, more stock is coming in, pressure is now being seen. You are seeing drops of rental amounts, and the knock-on effect will go through into next year, and this will be a continuous drop. So last but not least, there is an article here by The National. They say that there's a handover of 72 to 74,000 units this year is expected to stabilise the rents in Dubai, reducing pressure on tenants and offering them more choice. Very, very true. It's already happening, but it's not happening at the magnitude that it would have happened with 72 to 74,000 units coming into the market, because we know that that probably isn't going to be the case by December 31st. Who knows? We'll have to wait for the data, but I'll be very surprised if 30, 40,000 units are about to hand over in the next 3 months. Right, so on to the next slide. Now, this is a really interesting one, which every broker is grasping hold of. As the population's increasing and your price is going up and there's not enough stock. That just simply isn't true according to data. Rental transactions are dropping. So where are all these people living? Now, what isn't being talked about or information being given is who's moving here. What job are they coming for? What's their disposable income, where they're living? Because there's a natural assumption that everyone is moving to the marina, to JBR, to downtown, and they're all multimillionaires and they're all gonna buy and they're all gonna rent. I beg to differ, because the data, not my data, third-party data, is suggesting something else. Because there isn't rental transactions. In fact, rental transactions are decreasing, not even stabilising, they're decreasing, which shows people aren't here to rent. And in fact, when you start looking at, which we'll talk about in a minute, but property purchase transactions have fallen off a cliff. So it's not like people are buying to live in it. And 60-70% of what people are actually buying is off plan, so it's air at the moment. So if all these people are rushing to move to Dubai, which I'm sure they are, I'm sure the stats are correct, I'm not questioning that, I'm saying who is moving? How much money do they have and where are they living? Because they're not moving into the areas which everyone wants to talk about, your more prominent, or what should we call new Dubai, Palm Jumeirah, downtown, JBR, Dubai Marina, JVC, Business Bay. These are all feeling pressure because transactions are dropping, which means prices inevitably are dropping. So the Dubai population grew by 5.5% year on year, rising from 3.81 million in September 2024 to just over 4,200,000. So, however, year on year, the total rental transactions have fallen 11.9%. So if we're seeing a population increase, surely rentals would at least sustain, but should be going up, but in fact they've dropped by 11.9%. So I cannot say this enough. We have to anticipate who is moving here and where they are living. Is it labourers that are coming over to finish these towers off quickly? Well, I would assume so, because towers are now being finished a year early. Could it be taxi drivers? Could it be people living at Deira in the old parts of Dubai? All of this, because if you're looking at the transactional volume of the new Dubai and the areas that everyone wants to talk about, they're dropping. So something's not correlating there. So it's a huge thing that we need to focus on, right? And we need to anticipate that not everyone that is moving to Dubai has money, or is a multimillionaire, or is moving into the areas which everybody is talking about, or majority of data talks about in the new Dubai. Because 11.9% less transactions, where are these people living? And 70% approximately of properties that are being bought are all off plan, so they don't exist. That's the data, right? This isn't just me making this up. This is information that is distributed between Property Monitor and the government of Dubai population clock. So there's the sources for it, but there's a mismatch here. As I said, I'm sure they've moved here, people have moved here, and I'm sure that number's correct, but they're just not moving into the areas that everybody wants to focus on. and put, you know, a lot of these brokers will consider as the beating heart of the real estate market, not necessarily places like Dira or anything like that. So big factor there, population increase, yet transactional volume for rentals is dropping and sales transactions is dropping for secondary. And majority of people that are buying sales are buying off plan. Doesn't make sense, does it? Right, moving on. Next one, right, rental contracts, new versus renewals. This is a really interesting one. This is showing how this market's changing, becoming a lot more competitive. So while new contracts are showing strong growth, renewals have declined from January when they were 34,173. That's decreased to 24,771 in September. So that's indicating that client retention, tenant retention as it were, is not as strong as it could be. Are tenants moving to find more attractive contracts? Well, yes, because now Khaleesi Times actually published an article in the last month saying that Dubai tenants are now getting 1 month's free rent. Better deals with landlords as they're adjusting to a rising supply. So what this is saying is there's a lot more competition now in the market by these landlords that are either reducing their rent or offering things like 1 free month, which effectively is reducing your rent because in a 12-month period, you've now lost 1 month. So that is less rent that you are achieving, and that you're finding that anyone that is up for renewal is saying, actually, you know, the building next door or the floor downstairs is offering me, you know, the same rent but 1 month free, so I'm actually now saving 7,000 dirhams a month or whatever it is. You know, I'm making these numbers up, but it gives you the idea. So this is now the start of a competitive market. This is what's going to happen. There's more supply coming in, landlords are struggling to rent it, transactions are dropping, so now they are offering these wonderful new deals to entice people over. Renewals are now dropping because people are now taking up new transactions. So it's still a circulation. So it's not like both are growing, which would indicate a population increase. Renewals are up, new transactions are up. They're not. Renewals are dropping, transactions are up, which is just showing a circulation of people hunting for better deals. Hunting for better deals means you're paying less, which means less money for that landlord. That is from Property Monitor and Khaleesi Times, those two stats. To see a decrease in renewals this year of 27.5%. 27.5% less renewals in this market. Now, it isn't necessarily people staying in Dubai. There's a lot of people that are leaving Dubai. There's a lot of redundancies happening. AI is playing a huge part. We've spoken about this before with Dakeem, and they're seeing this, is that people sadly are losing their jobs. There are people that will be leaving Dubai. That is not a stat that is released. We don't actually know what that stat is. But if people are losing jobs or whatever their situation may be, you know, this will have a detrimental effect. And of course this is. If renewals are down 27.5%, that is a huge, colossal figure. Right, moving on. So let's talk about rental contracts. I'm going to bring back in our friends at Dakeem. Just a quick shout out to them. I don't know the ins and outs of their business, go and talk to them, but they effectively insure your rent. So defaults or anything like that, they'll insure it for them. Go talk to them, absolutely brilliant. Really enjoy reading their stuff because they're very direct and they're not too dissimilar to what I'm doing here now. I was talking about what's actually going on rather than just cherry picking. So they've released a phenomenal graph which actually just shows that this year compared to last, only the month of March saw an increase in new rental contracts, meaning that March this year beat March last year. Otherwise, this year has dropped and dropped significantly. So the graph will be on the page for you to see. This takes us up to August, where you're seeing almost like a fish pattern emerge here, where you're seeing this tail widening as time is going on between 2025 to 2024, which this as a visual cannot tell anyone anymore of what this market is doing. 2025 is not performing anywhere near the previous year, and rental transactions are dropping. Now, again, as I said, there's numerous reasons that we can say. Is it due to job loss? I know I get several people that write in the comments, oh, it's because everyone's buying. Well, they're not, because 70% of what's being bought is off plan. You can't physically live in it, right? Secondary transactions, when you actually look at, I believe it was July compared to August. Ladies and gentlemen, I am interrupting our Big Short video. Now you'll see that this is a different background. I think I'm wearing the same t-shirt, but this interruption is because we've got some very important news that we just wanted to share, and we had already filmed the Big Short, episode 4, but we had to put this in. Now, I want you to listen to this because it's really important information. So, the secondary market slump, a 31% reality check. Now listen to this. According to Property Monitor, between April and August 2025, resale transactions, the secondary market, fell by 31.15%. from just over 7,000 deals to under 4,900. Now, I know a lot of you will say, aha, but Greg, it's summer. The market always cools off when it heats up. That is not the case. That was not the case. The market last year was going up and up and up. And here you are, some figures. So last year, that same period saw a 26% increase in transactions from 4,198 to 5,297 resales. So this isn't seasonality, right? This is a big shift in demand. And this is why I wanted to interrupt our phenomenal episode of The Big Short, just to bring you a bit of this information. So off-plan now commands nearly 70% of all property sales, and the ready market is down to just 30%. And it looks as though that's decreasing. So this brings me on to the point which you're going to hear me discuss in the video, is all about population growth. But the population's growing. Well, rental transactions are dropping and sales transactions are dropping. So again, I want to re-emphasize, I'm not saying that figure is wrong. I just think that the type of people moving to Dubai perhaps aren't the ones that everybody thinks are moving into the marinas, JBRs, JVCs, Emirates Livings, these sorts of locations. This isn't end user demand driving the market, it's speculative confidence in future supply and developer incentives, which is your off-plan, which we already discussed. And if this continues into Q4, expect longer absorption, get my words out, slower resales and pressure on mid-market prices. So right guys, 31.15% decrease in transactions from April this year to August this year. Now, that's it. I'm gonna cut back to The Big Short episode 4. But yeah, very interesting stat there for you. Enjoy the rest of the episode. Thank you. This market is evolving, and on a rental perspective, you are seeing less transactions happen. Again, something else to then look at the population growth. Again, sure, the population is growing, but people aren't moving into the areas that the general real estate market in Dubai focuses on. We can drop down and we look at another couple of graphs, again, kindly provided by Takeem, where they're saying that the residential year-on-year monthly rental new contracts is down 27.5%, and they're saying renewals are down 28%. So transactional volume, new tenancies are down 27.5, renewals are down 28. It's a huge figure. People do leave Dubai, and everyone assumes that everyone comes to Dubai and stays, but people are clearly leaving, because where are they living? This is something we've got to look at. Side note, we have seen some of the big boys. So PwC, they cut 60 partners and 1,500 members of staff from their Middle East offices. That was a situation which developed with Saudi. Again, it's all online. This is from the Financial Times. But this just goes to show you're looking at high earners, right, who are being made redundant. And these are the types of people that will come in and rent in these more prominent areas. These more prominent areas are seeing renewals and rental transactions dropping. Connect the dots, right? So we see what's going on with that. Right, moving on now, let's talk about long-term yield. So Engel Volkner's big global firm, a real estate firm, they've released their report. They reported in both July and August that gross rental yield was down 6.8%. No, it was, 6.8%, down 3.6% and 3.2% year on year for 2 consecutive months. So your returns are dropping, which is suggesting that, well, it's telling you that your rentals are now dropping. This can go either one of two things, as I've explained. People are dropping their rents, or what they're doing is offering you 12 months for the price of 11. That's effectively a rent drop, isn't it? So, and Property Monitor, they also show a decline in rental yields, falling from 6.99% in August 2024 to 6.76% in August 2025. That's a decrease of 3.29%. So 3.29% drop in returns, right? This is only the start. 35,000 units have handed over. There's meant to be 74,000 this year. There's meant to be 125,000 next year. So in between now and next year, you're looking at a combination of around 250,000 units. And so far only 40,000 have handed over, yet you're already seeing your rents drop. You're seeing transactions drop. What is going to happen when these 200,000 units hand over in the next 12 to 24 months? It's not going to be good, is it? Right, so moving on, this is a big one. So I did this one before, I can't remember the last show or the show before, that we looked at transactions and yields and things like that for villas. And we saw some really shocking information that the villa transactional for rentals are dropping, even though villas are everything and villas are gold dust and they're not, there's not enough of them and they're in high demand, while the numbers are suggesting otherwise. So source is the Property Monitor. Now you're going to see on the screen an abundance of different locations, majority all pointing in the red. What I've done is just pulled out the major developments which we all know and which everyone focuses on. So let's talk about it. So this is from Property Monitor, long-term rental yields. Dubai Marina, month on month down 0.32%, quarter on quarter down 1.44%, year on year down 4.9%. So your returns have dropped, rounding up 5% in Dubai Marina. Arabian Ranches, month on month down 1.94%, quarter on quarter down 3.46%. Year on year, Arabian Ranches, villas, gold dust, not enough villas, that is down 11.96% so far this year. That's double digits. This is huge. Jumeirah Village Circle, don't worry, I'm only going to do 3 more, so bear with me. But Jumeirah Village Circle, which we know is a huge amount of stock coming online, 20, 30,000 odd units being built there. So, I mean, that's a saturated part of Dubai, that's for sure, or will be. Jumeirah Village Circle, month on month down 0.66%, quarter on quarter down 2.71%, year on year down 4.43%. Palm Jumeirah, we all know the Palm, don't we? So, month on month down 0.9%, quarter on quarter down 2.39%, year on year down 4.59%. Downtown, where the Burj Khalifa is, we all know that location. Month on month down 0.17%, quarter on quarter down 1.36%, year on year down 3.17%. So Dubai Marina, Arabian Ranches, Jumeirah Village Circle, Palm Jumeirah Downtown. Dubai Marina, very, very popular, a lot of people living there. Arabian Ranches, villas. Jumeirah Village Circle perceived really more as a value for money exercise. Palm Jumeirah, some of the most expensive real estate, probably most expensive real estate in Dubai. Downtown, some of the most expensive real estate in Dubai, but very prominent with the Burj Khalifa, all showing red. Quarter on quarter, month on month, year on year. I'm just pulling those out randomly, but that's just showing you what the monthly rental yields are now doing in these areas. 200,000 units handing over in the next 12 to 24 months. So that's going to have some sort of effect, I'm sure you will agree. Right, moving on, the Dubai Land Department, they reported a total sales volume of 40.45 billion for August. That was a 22% decrease compared to July. 22% drop. Now, people will say, but it's summer, and you know, the market drops off. Well, it didn't last year, it carried on going up and up and up every month through summer. Yet this summer, within a month, value had dropped 22%. Double digits, and this is something I pointed out in the previous videos, is that you see a lot of double digit decline here. This isn't 0.01%. I know we've just talked about that month on month, but that's what you expect. But a lot of what we talk about in general is always double digits. Double digits is big. You know, I'm from England, and you consider, you know, a drop of 2% catastrophic, right? When you start talking about drops at this level, it's you know, it's scary. One thing we've also picked up on, and I think the slide should come up here now and show you, is that we're seeing more and more posts online of agents trying to sell stock. Here's just 2 that we've picked up on. Price below the market. Previously we sold this unit for 13 million and now it's 11 million. And where's that? Talal Al Gaf. Talal Al Gaf, really lovely housing estate that was built. Prices flew. I mean, when they were handing over, these things just shot up uncontrollably. And now look what's happening. They're simmering down. Selling it for 13 mil once, and now they want to resell it for 11. That's 2 million dirham. That's give or take $500,000-$600,000 loss. The second one is a really interesting one. The cheapest 1 and 3 bedder in Vida residences in Dubai Marina, right? So for the 3 bed, we would entertain 5.4 to 5.5, making it the cheapest transaction in the last 6 months. For the 1 bed, around 2 to 2.222. The prices are significantly below asking price in the current market and would like great investment for anyone. That is in a tower called Vida Residences, and Vida's nice. Vida's in Dubai Marina, quite a prominent brand. There's a hotel, this all comes under the EMA banner. There you go. There's someone who is now trying to sell 2 units for under market value and what would be the cheapest in the last 6 months. You didn't see this in 6 months ago, but now you're seeing more and more of these posts come up. You're now beginning to see these fire sales, people wanting to release and sell. I don't know the reason why, who knows? I'm not going to guess, but what I'm looking at is people now dropping their prices to sell units, which wasn't seen 6, 7, 8, 9 months ago. So again, another tell of the market. So just on this alone, 22% less, according to Dubai Land Department, 22% less sales value. And then you're also seeing now these fire sales coming through. So again, what's this telling you about the market? This wasn't happening 6 months ago. Right, let's move on to the next slide. Something I've touched on already, something I've touched on before. Who's buying what? Off-plan versus secondary. So Q1, off-plan made up 64%. Q2, off-plan made up 67%. Q3, off-plan made up 69.5%, 70%. Speculative market. There are people that are buying that are now looking to either flip or they wait till X amount gets paid off and then sell it. I haven't got the figure of how many people actually move in, but in my general experience, 10% probably move in, if that. It's either people that are gonna buy it, retain it, and then rent it out, which means more property coming into the rental market, or it's people that are selling it. Now, this is a big thing now that's just come through. Financial Times, the Daily Telegraph even printed something along the lines, but the Financial Times, this was 2 weeks ago, Dubai property boom shows strain as flippers get buyer's remorse. Dubai's property market has been characterised by boom and bust since it opened to foreigners in the early 2000s by international investors. The article then goes on. Feel free to go and have a look at it. But what it's basically saying is that people are buying these properties off plan, marking them up by 5, 10, 20%, whatever it is, and looking to sell it to make money. That market doesn't exist anymore. And in fact, our friends over at Property Monitor, they've been talking about this as well. This flipping market, this mentality seems to be drying up, and that will more than likely be due to excess of property or the fact that prices have gone too high, that you can't flip it for 5, 10% because the buyers aren't there to take it. So that segment of the market will be very interesting to watch, because if off-plan's been such a key driver, and it has 64%, 60, 70%, and 70% has made up sales transactions for the last 3 quarters, what happens if these people that are buying off plan go, do you know what, I was going to buy that, keep numbers simple, for $1 million, mark it up to 1.2, I'm now being sold, buy it for $1 million, I doubt I'll be able to resell it for the same money. Are they going to now buy off plan or not? So this is all now evolving in. So this is a huge thing to watch, because this makes up majority of the sales transactional market. And if the reasons people are buying is under strain, why are they going to buy? One to watch. Let's keep an eye on that one. So moving on, short-term rentals. So really interesting stat. I think I touched on this in the last video, but something that we can just talk a little bit more on. But there's this overwhelming chitter chatter. Oh, Dubai's busy, Dubai's busy, Dubai's busy. Lots of people moved here, lots of people moved here. However, sources according to Property Monitor that Dubai ranks #1 globally for the tourist to resident ratio. 5 tourists for every 1 resident. So although it can feel like the city is incredibly busy, for every 5 people walking past you in the street, 1's a resident, the 4 are here visiting. We know that Dubai is one hell of a phenomenal tourist machine. We know that. But I'm now talking about the residential side and going back to this whole, oh, the population's growing and it's really busy. And, you know, I got caught in traffic one day, which means the town's really busy again. But that is a figure, as an investor, you can't ignore. Don't get caught up in this hype that, oh, Dubai feels busy, or the mall feels busy, or the rest of it. 5 to 1 people in Dubai now are tourists. They don't live here, right? The other thing to remember in this as well is that a lot of people that do buy here for visa reasons. A lot of people I know, a lot of people I've represented, they buy here, they're here 3 weeks a year. That's it, they're doing it for tax reasons or whatever, their personal business, but they're not here. 6 months a year in Dubai is 35, 40 degree heat. You know, you can't go outside without sweating. 4 months of it, you can't go out sweating. You can't really go outside at all. So we have to remember that these key metrics do play a large factor in who's coming to Dubai and the reasons why, and then why people are buying. So I've gone through the reasons now. Your returns are dropping on rentals. Transactions are now dropping on rentals. People that are buying to flip are now finding it harder to do so, right? And then transactional value dropped 22% between July and August. Put this all in that big pot, stir it around. What's this all telling you? So last but not least, that's borderline pretty much wrapping up everything I've got to say, but last but not least, just a bit about us. We are releasing our real estate report. You will be able to click on it and see it, or what have you. So have a look at that. That gives you some really good intel as to what the market is doing. We try and be as neutral as we can. Yes, you're going to see bits about the short-let market because that's what we do. But that is some great intel for you. We as a business, and a bit about the short-let market at the moment, really interesting. It looks as though we are coming into arguably one of our best months for rates that are being paid. Now, we did a lot of work over summer, completely and utterly turning upside down how we price property and our whole procedure and our formulas and all the rest of it. But what is interesting is that you're actually seeing our returns going up. Now, I don't know how that's going to go. It's the 8th of October. High season starts about now. So let's see what happens with that. But tourism is always going to be a driving factor. You're always going to see people coming through to Dubai. From our perspective, it will be an interesting one to see. But, you know, I said this in the last video, more stock comes into the market, means more stock will come on our books, which inevitably will drive prices down. So you'll see returns drop, rather. So another interesting Big Short. This is the 4th one we've done, pulling out facts and figures. And again, I'll repeat it. This is all online. You can get all this information from various sources online. Dig into it, have a look, write your comments below, let us know what you feel. The whole point of this show is not to be derogatory or negative about a market, but it's to talk about what no one else is talking about. All the data's there, it's all there for everyone to see. It's just this is the sort of things we've got to talk about. And when you start talking about these types of figures, they're definitely things that you have to talk about, as I'm sure you agree. So look, thank you to everyone who's going to watch this. Let's try and beat that 350,000, shall we? Let's try and do 500,000. I mean, that'd be amazing. But otherwise, thank you for your time. I appreciate it. And for those that have continued to watch us, a big, 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 big thank you for you. Please give us a thumbs up. Please write in any comments, anything that you feel. And I'll be back again in 5-6 weeks to give a rundown of what's going on in the market. So thank you very much, and I appreciate your time. Have a great day.